Basically, trading the lower time frame requires more attention. It's no different from the higher time frame because it's the same structure. What happens on the higher time frame is basically what is happening on the lower time frame, just that the lower time frame happens earlier. So the higher time frame is easy to navigate because you have seen what the lower time frame is saying. But other than that, the lower time frame is very easy to trade. You just have to be observant and stay vigilant, so you'll be able to observe and pick those little details in a lower time frame. Something as little as this structure coming down creates something like this and goes back down. If this was a 4 hour time frame and then there's a supply zone. I don't know why this thing turned. Okay, and then let's say there's a supply zone around this area here. Okay, if this was like the 5 minute time frame, I'll be very vigilant to want to take a trade from here because there's every chance that this could fail because these are equal highs. So if it was a higher time frame, then it's most likely that we might see a reaction like this, dropping like 50 pips. Just this one alone dropping like 50 pips. This one dropping like 30 pips before we get stopped out. You understand? And on a higher time frame, there's every possibility that you could see something like this, then a stop hunt before price goes in that direction, which is likely what might happen because this would be relative equal highs. Do you understand? So if it's a lower time frame, these moves would be 3 pips, 5 pips, 10 pips, which cannot really make anything for you. Instead, it's just going to induce you for the stop hunt, and then when the stop hunt happens, you find yourself hitting stop loss every time. You understand? So something like that is basically it just needs more attention. That's what I would say. I would just say the higher time frame needs more attention than the lower time frame. Sorry, needs more attention than the higher time frame. Okay,
but sometimes the 4 hours might be bullish, then the 15 minutes or the 30 minutes might be bearish. How do I go about it?
Well, time frames comes with its own structure, but if the monthly is bullish like this, the weekly, sorry, would be like this, and then the daily would also play a structure similar to this. But the time frames are just like changing words. If you now come to 4 hour, let's say the black line was a 4 hour time frame and then the yellow line was a 15-minute time frame. If the 4 hour is still at this point, right, and then we are seeing something like this, and then the 15 minutes is retracing like this, that doesn't mean you should take your eye off this area of interest, because to the 4 hour time frame this is just a pullback, and to the 15-minute time frame this could be something looking exactly like a trend like this. Do you understand? So if you're paying attention to the swing points of the higher time frame, you get to see when these things are likely to change direction. So if the 4 hour is bullish and the 15 minutes is bearish, for me I would say wait, because obviously if the 4 hour is truly bullish, the 15 minutes will definitely break structure from the bearish side to the bullish side once it's in an area of interest. And once it does that, it's a sign for you to go in because the higher time frame is basically bullish. Do you get? So you're supposed to be trading a bullish 4 hour time frame and observing a bearish 15-minute time frame for a breakout, so you can join the 4 hour bullish time frame once the 15 minutes gets bullish. You're not supposed to be looking at the 4 hour time frame and the 15-minute time frame bullish at the same time. That's like having a perfect entry at a perfect timing. Do you get? But
Yes.
if you're looking at the 15 minutes being bullish and the 4 hour is bearish, that's where you have a problem, because there's every tendency that the the 15 minutes could even go bearish anytime soon, because the original trend is bearish and this bullish momentum is currently just a correction to the bearish side. Do you get? So when you look at trades like that, you end up getting stopped out because the original trend is bearish, which is the 4-hour time frame. The higher time frame is always stronger than the lower time frame. That's something to take note of. Okay.
Yeah.
All right. So
I have another question.
Okay.
So, sometimes, like, if you go down to the lower time frame, like the 30 minutes, even if the trend is like bullish, you can like be trading from the internal structure of the 4-hour time frame. Meanwhile, on the 15-minute time frame is an external structure. I don't know if you understand.
Come again, sorry.
Like on the 15-minute time frame or the lower time frame, you might be trading an external structure of the 15 minutes time frame, but on the 4-hour time frame, it's just an internal structure.
Okay. It's very normal. Do you understand? It's very normal. For you to be able to trade, you have to be able to navigate these things. Do you get? Because you're going to be trading. You're trading two things basically. Number one is the structure, not the trend. Number two is which structure. Do you understand? Because every time frame, like I said earlier, has its own structure. What we are doing is following the structure of a particular time frame. You understand? While we use the information of multiple time frames. Do you understand what I'm trying to say?
Yes, I
So
understand, but which which zone would be more like stronger and safer to trade? The 15 minutes external structure or the 4-hour? Because sometimes price just seems to like mitigate the 15-minute structure. Let me say the lower time frame structure and just go.
Okay, let's say we have something like this. Okay, and then this is like a 4-hour structure, and this is a 15-minute structure, and this is price currently pulling back. Okay, this is guys, and your question is, you have this zone, right?
Yeah.
And you also have this zone. So which one would you pick? That's your question, Abi?
Yes. That's my question.
Now, the main focus should be number one. Which one broke this low? Do you get? First of all, the main point of interest is the one that broke this low. And secondly, the reason why price is retracing, if it's a retracement and not going to break structure, is because it's heading to clear liquidity. Do you get? And currently, if there is no liquidity being created, which is, let's say you see price just moving in a straight line towards this guy, it's going to be risky to take this guy, because this guy would be the inducement for this one. Do you get?
Okay.
But when you see something like a structure like this, and you see kind of like a resistance being formed just below this one here,
Yeah.
that becomes an inducement, because a lot of people must have gotten in from this area thinking truly that is a resistance zone. Don't forget, it's not just us that trade this market. We have multiple methods trading them. So a lot of people could see this as a resistance zone and are already on a selling position. So it makes that POI above an area of interest, because the market now doing something like this is highly possible. Do you understand? So a matter of which one do you trade is not the question, because both of them can be valid. It's just depending on how structure is reacting to them. That's why it's always important to wait for a reaction before you take any position, because Market, you can't really tell where it's going to go. You just know where to wait for. Do you get? That's why it's called the point of interest or an area of interest. You're waiting for price to come to that zone before you're interested in it. If it's not there yet, it's pending. So you could have 2 to 3 to 4 pending zones depending on how well you know how to mark them and what are the criteria you use to mark them. You don't just mark any zone because you see it's a supply or a demand zone. Every zone is a supply or demand zone. It's just a matter of which one is unmitigated and which one is presentable with confluences from what you have understood from what you have been learning. You understand?
Yeah. Yes.
So if you have 2 zones, me, I would always stick with the higher time frame on one. And secondly, whichever one, this is one of my tricks I use. The one that shows low momentum. For example, you have sorry about that. Let's say you have price doing this, and then this is a POY. Let's say this is a POY, and then there's another one here, and then price comes to this area of interest and starts to do something like this. This is a flaw for me. Do you understand? This is a sign that this market is not willing to go down. But the point of interest, which is this guy, is doing its best to try and push the market down, which makes it a resistance. Yeah. That's why it's resisting. But you can't resist the market because the trend is, the structure is following the trend. So we don't follow the trend, we follow the structure to be safer. And if this structure is is repelling against this resistance zone without breaking any significant structure, let's say since we haven't broken this low yet, it's just mitigating this area of interest, it's very risky because then it cannot do this.
Yeah.
And that's a lose for us. You understand? That's a lose for us because then we became the inducement because there was no inducement here in the first place. So this guy has to be the. You remember, if you can't see the inducement, then you are the inducement. So yeah, there was no inducement here in the first place. So this guy was the inducement, and if this guy is doing this, it's just inducing more traders into the market. So this happening is very, very possible. Ticket. Same goes for that same zone. If market approaches that zone and doesn't give a reaction, it starts to do this. It's a problem. Do you understand? It's a problem. So those are things we watch out for to not fall victim. You understand? For any of them, those are the things you watch out for. So, do you have any other question?
No, I'm fine. I'm okay. Understand.
All right. So, I'm not on system, so this is presenting from my phone. The market looks shitty, I won't lie. I have gone through some of the charts, and there's nothing really presentable to make analysis of right now. So I'm leaving that till Tuesday, so we can take a better look at what is coming out for this week. Okay, that's observing Monday's price action before we trade. Remember, Monday, it's the day the market settles in. So if you can't see anything over the weekend, it's best to wait for Monday. And the reaction of Monday will tell us what to do on Tuesday and for the rest of the week. So let's just wait for that.
I have a question.
Okay.
There's this trade you posted like in NZD card. I want to know like how you went about it. NZD card, like sell, I think.
Okay, NZD card.
NZD card.
I don't know if I can remember that. How was the trade? Did I lose it or did I win it?
No, you won it. Like I want to know like the criteria you used.
Okay, was it that one that I just showed an area of interest and it just reacted? I don't know. I'm trying to. All right. Was it this one?
Yes.
Okay. If you look at this right here, the structure, as you can see, okay, Now, let's say this has not happened yet. All this, let's say that has not happened yet. And if you pay attention, you'll see from the line we have this fair value gap here. Okay, this
Yes.
guy mitigated this, so you can see clearly the structure is following up. So this is clearly a supply zone. You agree, right?
Yes.
Now, this was a hidden base that was not respected. It got stop hunt by this guy. And we had an order block as an area of interest. As you can see, the low that created this high, that created this order block, never got broken. That still looks bullish. Do you understand?
Yes.
And then we had this mitigation here. Now, that mitigation is a confirmation that we could be bearish and this would be the liquidity target. As you can see, it got stopped out, but this was the next day on the 26th. And that wasn't really a break of structure, but basically a stop hunt. That's why I tell you I always use a body close. And as you can see, there's no way this has a body close unless it's on the 1 minute time frame, and that is not a break of structure but a stop hunt. So which means this is a weak high. Do you understand? That means that's a weak high. And if it's a weak high and this was the original structure, doesn't that just make this an inducement?
Yes.
You understand? So knowing that and looking at what we now had here, let me clear everything again. You would see it's basically trying to show us it's an accumulation. You understand? This is a range. This is basically accumulating. There's no clear structure. But on the bright side, who is being in favor here? The higher time frame is always correct. So if we were on the line of the higher time frame, which would we be in line with? It would be this guy. That was the base. That was basically the reason why I picked that. There's nothing special to it. My counter idea was this stop hunt, and then this guy becomes my new area of interest, and I'll be looking to go bullish from there. You understand? So, and as you can see, that did not happen, and instead this happened. And if you look here closely, you will see they also created liquidity. Do you get? Basically, liquidity was created here, which makes this an area of interest in the sense that this happened.
It sold massively.
Okay, you see, my entry was already out, so I didn't pay attention to it again. I placed my first take profit here because I was busy. So my first take profit was on this low. So when it took me out, I came and saw the notification. I was like, dang it, I didn't even get a screenshot. So let me just share this one and, let it go. So I didn't even pay attention to it again. But that was the criteria. That was the analysis of this particular idea. So that was what I looked out for before I shared that. So once you have paid for something, it gives this level of attention towards it because it's valuable.
Yes.
So basically this training is to create educators in the industry so we can also help the industry grow while we also gain from it without trading. Because as you can see, majority of the people gaining from this industry are not even professional traders. So if you can be educated properly and you have the right tools, you also can become a professional trader. And we can slowly create an industry that can be convenient for anybody who wishes to learn how to trade. They don't have to be scared of being scammed because they know there are some certain people who know how to do it and are actually doing it publicly. So the program is there to help those who are willing to learn. I don't even want anybody that is ignorant because I don't have strength. I cannot start enlightening somebody who is coming to tell me they are good in trading and they want no, I don't want any. If you're good, then do it yourself. You understand? If you're good in, if you have that influence, then influence people. Don't come and meet me to educate you on something and then you want to show me what you have done. I didn't learn it by doing that either, so I won't take it from anybody either. You understand? So if you're coming to learn, you have to have the mindset that you're coming to learn. It's like going back to secondary school, not even the university. So I need your complete attention and your willingness to learn. You understand? In the next 3 months, you could build any brand, not just trading. You could build any brand because right now I'm currently having more than 6 to 7 brands undergoing construction right now, not online, but with the format and formula I have, I can basically start up anything I want because it's the same thing. Social media is a world on its own that things exist. You understand? And these things are created by human beings. These entities are created by human beings. They grow over time. So you're basically going to become a creator. That's why it's called digital creator. You understand? So it's not just trading. You're going to learn, not just posting signals and profits and all. You're basically going to learn how to become a brand. So you can basically decide to brand your YouTube channel for something else, start a real estate brand, or whatever you are good at. And if you have the equity, you can do it yourself too. So many of us have equities in this industry. We just don't have the knowledge. And majority of them feel like the knowledge is something they can acquire from experience. But experience is different from getting knowledge. Experience would give you wisdom towards that thing you're trying to do. That's why you see we have the elderly ones wiser than the younger ones. It's basically because of their experience. You understand? But that doesn't mean they are smarter than the young one who went to school. Two different things. You understand? Those are two different things. So experience is completely different from knowledge. And everybody needs knowledge to navigate a particular industry, be it Forex, music, dance, whatever means of entertaining or whatever creation that requires attention and validation. It needs proper education. You understand? It needs you to know what you're doing so you can be able to present yourself in a proper way. Because if people don't trust what you're doing, how can they come to you to learn? And I know we have so many people doing it wrongly in the industry right now, but that's just showing you that they won't last long. Do you understand? Majority of the people following them are not even real. They are just following them for following sake. That doesn't mean they are following you to learn from you. You understand? They like the things you post, doesn't mean they like what you do. You're trying to show that you can educate people, so you're going to be learning how to. You understand? And once you are done, you should be able to teach people as well too. So it's going to be a learning class again to educate us on how to educate others, not just learn. So you have to know how to trade to be able to do this. You understand? You have to know how to trade. So you have to, you must have learned how to trade. And if you haven't, you are undergoing training with me, so it's going to be easier already. That's why I'm presenting this to you guys. But for those already in the public channel, well, it's up to them. I'm not forcing anybody. I'm already okay. You understand? I'm just doing this so that it's my own contribution to the industry. As you can see, it's already my brand, so I have nothing to lose. It's just growth. Let's just call it growth. So that is that. That's for that. For whoever is interested in joining the training, can send me a direct message and we would handle that. For analysis, bear with me, by Wednesday we would have a proper breakdowns. As you can see, the market is not looking nice for the weekend, so I'm not going to send any charts that I'm not sure about, so we don't have a breakdown mentally. So during the week we would have a proper analysis check. Any other person have any question? I see we have new guys joining in. Everyone, you're welcome. Anybody have any question for me so far during the week, or you have something you want us to look into? This is more like a question and answer section. I'm operating from my phone. I have a serious network issue, so I don't want us to go back and front on the system. And there's nothing to do on system too, so we'll handle that during the week. But any question?